Hello, Evergreen Traders. This is JC De Guzman. Welcome to our EquiTalks episode number 45. Today is December 11, 2019, Wednesday. In this episode, I'll be discussing my analysis and giving my recommendation for Jollibee Foods Corporation with a stock code of JFC. The question that I'm going to answer is this: is it logical to top up on JFC between 205 and 207.6? Well, without further ado, let's take a look at my analysis and the chart of JFC so that we can arrive to the answer for that question. So here you go. JFC closed today at 207.60. The immediate support is at 200 while the resistance is at 216.4. Foreign investors registered a net foreign buying worth 19.9 million pesos. Yes, while it's a net foreign buying, it's still relatively slower or slimmer than the net foreign selling bars that we saw or that we have been seeing in the past few weeks. So in a way, I can tell that JFC is still far from a complete recovery. That's somewhat obvious by merely observing this downtrend channel on the daily chart of JFC. The 10 MACD combo is bearish, which means there's zero confirmed buy signal at this point. Risk level is still low because of its historical volatility score of 50%, but it doesn't mean having a low risk level is not always a buy signal. It's not really a buy signal actually. Now, on the DMI chart, I'm seeing here that the negative DMI is still moving above the positive DMI, and even if the negative DMI is already down in a downward sloping pattern, I am not yet seeing a bullish convergence between the positive and the negative DMI. So, to simplify that, this means that I'm not yet seeing any sign of a strong reversal on JFC. This recovery that we're seeing right now could only be a short-term recovery. But I'm not saying it will continue to I'm not saying it will drop again below 200, but what we can do right now is to stay on the sidelines and don't rush in terms of buying yet. Okay, now take a look at my trade and volume distribution analysis. Even if the last price is higher than the volume weighted average price of 216.07, not really even if, but it's actually a statement. It's not a negative thing, and in fact, the momentum power indicator of JFC is bullish because number one, it's a green candlestick. Number two, the last price is higher than the VWAP or the volume weighted average price, and number three, the dominant range is closer to the intraday high than the intraday low, as you can see on my trade and volume distribution chart right here. And number four, today's volume is green and it's greater than the 50% of JFC's 10-day volume average. I know that's a mouthful, but you can learn more about it in my online stock market course or online stock market seminar. For more details, go to our website at www.equilyst.com and then click on the course menu that you will find on that list on our website. Now, moving forward with my analysis, today's true market sentiment is bearish. The week-to-date true market sentiment is also bearish. For month-to-date, it's also bearish. So it's all the more that you should, keep an eye on your trailing stop, especially if you already have JFC in your portfolio. So here's my suggestion. If you have JFC in your portfolio and you are considering topping up, yes, you can top up within the dominant range that I have mentioned a while back, but I suggest that you be on top of your trailing stop. Meaning to say, every time you see JFC registering a higher prevailing price, make sure that you do an upward adjustment on your trailing stop. That's one of the many lessons that I teach in my Evergreen Strategy, specifically in lesson number 6. Okay? So for those who have subscribed to this online stock market course or seminar, make sure that you finish everything from lesson 1 to lesson 6. And I know I've included some bonus lessons there actually, okay, in your subscription. Now, for those who don't have JFC but are planning to have it, to trade it, you may also do a test buy within the dominant range. But please, never go all in. That's part of the risk management. And as soon as your order is executed, make sure that you already know where your trailing stop is so that you're not clueless just in case our data-driven expectations won't be translated into reality. Okay? So that's the answer. So the question, is it logical to top up between 205 and 207.6? The answer is a yes. It's a logical based on our Evergreen strategy. Now, I would recommend that you take a look at what's included in our services, in our subscription service. If you need our assistance, if you need to have access to our investment guide for long-term investing, if you need access to our daily videos with 10 trade setups for short-term trading, if you need to have an access to our private clients forum so that you can ask me directly or my analysts whom I've trained personally, then you can consider subscribing to our service. To know more about our subscription service, please go to our website at www.equilyst.com and then click on the subscribe menu or link on that page. Don't forget to subscribe as well to our free newsletter. If you're watching this video, just go to our website at www.equilyst.com, click on resources, and then click on learn. You will see that page where you can subscribe to our free newsletter. Don't forget to confirm your registration so that it will become valid. You will receive an email each time we publish an EquiTalks episode like this one. So don't miss it. So again, this is JC De Guzman, and thank you for listening or watching this EquiTalks episode number 45. Always remember, be evergreen.